The fact that the governance per se, I guess, is becoming better. Primarily with the IBC as a resolution mechanism for the banks, so also the SURFACE piece being tightened and made better for secured creditors. Uh, the view is that more and more corporates would prefer to be far more compliant, far more open and transparent with banks as compared to possibly what it was yesterday. So, from that perspective, I would say that risks for the banks would definitely improve in general. I would not, you can't really say something specific related to sectors. I guess different sectors are going through or facing their own share of challenges, or they're seeing their own share of growth or consolidation. AI and artificial intelligence or machine learning both have a role to play in terms of improving how you do credit underwriting as well as how you manage the overall business in terms of cost efficiency which they bring in. And they are not a be all and end all tool, but definitely a very important tool which one is using in different ways. So just to give you as an example, at the in terms of smaller ticket loans, one is very clearly using a lot of analytics today in terms of from the perspective of using the data that you already have with your own customers over a period of time, how exactly they have behaved, and you are using a lot of artificial intelligence or AI tools to predict uh, predict the default or based on the data that you already have on the customer. My view, very early stages, I guess some of the fintechs end up using some of the social media data to do some bit of possibly credit underwriting. But I don't think it's a very actively used channel with respect which one can find with the banking system. So, in my view, fintechs are going to play a very important role in terms of being integrated with what innovations or what movement you can see on the digital side, which banks themselves are getting into. So, banks will work very closely with some of these fintechs to offer products, integrated products, or better products to some of their customers. So there are a whole host of services that we continue to add from the point of view of products in both the payments as well as the collection side. In fact, the latest offering that we have is the Smart Pay product that we have launched, and we are the first ones to launch it, where we offer a single window MIS to customers across all types of collections, whether it is cash collections, physical collection, RTGS, BBPS, in any form of electronic collections or physical collection that happens which the customer uses. I think blockchain per se, in my view, is seeing these are very early days for blockchain. I would not say that blockchain is something which has really caught on and in a big way, and there are dramatic amount of volumes which are happening on the blockchain side. But it is something which all the banks recognize is a great area to uh, work together and ensure that we can offer products to customers, because there is clearly ease of movement of both on the trade side as well as on the payments and collection side in terms of using blockchain as a product. But until unless the entire framework is put in place, and most of the large banks end up participating and coming together to create that particular platform, only then you can start integrating or showcasing the platform to corporates to come on that particular platform and build their entire supply chain, coming or integrate their supply chain on that particular platform and start using it.